Right, folks, I think we'll make a start. So my name's Colin Hailey, partner at Confluence Tax and chair of the Finance and Tax Committee at the BIA Association. Got a lot of participants today for this session, but we'll get underway because we've got a lot of material to get through. Just for everyone's information, this session is being recorded, so attendees who are non-panelists are able to ask questions in the Q&A facility at the bottom of your screen, but you will be muted and not on camera. We've got a fabulous panel today, so delighted to have David Harris, Senior Policy Advisor from HMRC, joining us. The BIA has worked very successfully with David over the years on changes to the R&D tax credit regime, on the introduction of the patent box regime and changes to the patent box regime. So we're delighted to have him here today. David will give us sort of an overview of the changes are planned for the UK R&D tax credit regime. Also, Melissa Strange, for CFO of Closed Loop Medicine, and then Richard Turner to FTI Consulting will then add some thoughts and some colour to what's being discussed. As we go through, please think up questions you've got and queries. Well, obviously, I believe plenty of time for questions at the end. The overall time of the session estimated to be about 50 minutes. We may well end up at an hour, so please do keep your questions coming in. We'll try and get all the key ones answered. Just in overview, this is quite a number of major changes to the R&D tax credit system. And I know it's in the slides, but I'll mention it now. These changes don't come in the next 5 minutes. They come in for accounting periods beginning on or after 1st of April 2023. So if you've got a December year end, the first year that will be affected is December 2024 year end. So you've got a bit of time to get ready, but there is quite a bit to be done actually and planned for. And I think just in overview, these are changes, and a lot of the stuff on whether overseas expenditure can be included in R&D tax credit claims is a change, and it's an adverse change from a taxpayer's point of view. But if you look at where the UK is, you've got the UK R&D tax credit regime been very generous in the past. If you look at systems like in Australia or Canada, they've got higher rates of credit, but you've got to do your work in Australia or in Canada. What the UK is moving to is a system that says you can be doing your work in the UK or in certain circumstances be doing it overseas. So we're not going to the harsher systems. We're still in a very competitive system in the UK. There's just more to get done from a compliance point of view, and more to think about often from a procurement point of view to make sure you're saying, I'm using these suppliers for a good reason if they're outside the UK. But we'll cover that in more detail. But do you want to give you that overview? This is not a disaster scenario. The BIA has lobbied very successfully, worked very successfully with HMRC and the Treasury, try and get to something sensible that works for the life sciences industry. As ever, there will be the devil in the detail, and hopefully we can get into some of that today. So without further ado, I'll hand over to David Harris from HMRC to take us through the key changes.
Thank you very much. Yeah, I'm going to briefly introduce what's been happening over the past year, 18 months on R&D and where we are now. And then I'll say a little bit about the draft legislation which was published last week and which you can read at your leisure. Next slide, please. So the background is that, as you'll be aware, successive governments have been committed to enhancing the UK's R&D activity, and the current government has a target to increase spending to 2.4% of GDP by 2027. The reliefs are about 20 years old, so they've been going a long time. They've provided a lot of support, but there have been concerns that they weren't completely well tuned to this kind of current UK situation and to modern circumstances, as well as some concerns about abuse and the fact that the UK is in quite different circumstances now to how it has been 20 years ago. So there was a review of the reliefs announced at spring budget last year, and followed by a consultation which ran last summer. Had a huge number of responses to that and a lot of useful conversations, including with BIA and its members. And the outcome of that, next slide please, was a package of changes that were announced last autumn in the autumn budget. And there was considerable amount of detail published then, but not legislation. And just briefly, a significant point then was this overseas issue, and the reason the government is trying to focus relief on UK activity is that the whole justification for supporting R&D is in terms of a positive externality, a market failure. That it's that when R&D takes place, it provides benefits which the company itself can't capture. And some of those are benefits tend to arise where the activity actually occurs. So the stated policy aim now is that the UK should be capturing more of that, so that if the R&D effort results in increased skills, for example, and capability in companies, then those should be, as far as possible, located in the UK. So there are there are some changes to do that. There's also, though, if you restrict something, you ought to do an extension to balance it. There's also an extension of relief to cover data costs and cloud computing costs, which I think has been an ask from industry for several years now. These are costs which I think are a lot more significant, perhaps especially the cloud computing, than they ever have been before. They certainly weren't something which came up when the original reliefs were introduced 20 years ago, and that just kind of speaks to the transformation of the sector since then. So we will be implementing that, and finally, as always, we have concerns about abuse of the reliefs, and so there were some changes to address that. And also there's a whole a list of small points with the reliefs which it had become clear over the years just weren't quite working or were having strange results. So there's a lot of little changes to address things like that. So things like details of the definition of an SME when one group company becomes large, that sort of point. So the draft legislation for all this was published. Excellent transition, was published last week, and it is now it's effectively put out for comment now, with a closing date of September. And the intention is that legislation then folds into a finance bill this autumn, and will be in effect from next April. As mentioned earlier, it will apply to accounting periods that begin on or after the 1st of April next year. So if you're used to working with draft legislation, then you can confidently go in and read it. I've just described on that slide how exactly it works. We have one long piece of legislation, a schedule which introduces all the changes, and that's introduced by a clause, and it covers both R&D schemes. So next slide, I think we won't. So what you'll see if you look at the published legislation, and I'm going to concentrate on some parts of it here, you'll see a thing described as Part 1, which is all the overseas stuff. A Part 4, which deals with the data and cloud costs, and also some anti-abuse provisions, and then the rest is really just consequential changes which we don't need to worry about. So I'm going to go on to Part 1 now. So what we are doing in effect is, so we're introducing a new section of the Corporation Tax Act 2009, which will be the elegantly titled Section 1138A, which will apply restrictions, as mentioned, both to payments for subcontract costs and also to EPW costs. So it's largely those things. Subcontract costs will only qualify if the R&D takes place in the UK, or if an exception applies. With externally provided workers, it's hooked onto whether or not the person is taxed within pay-as-you-earn. So that we kind of use that as a distinction. Is it subject to UK taxes? The company effectively paying tax for them. But the same exceptions apply in that case. And this was partly because, you know, a powerful argument was put to us that there are circumstances where it's necessary for R&D to be done abroad, and you know, indeed very, very useful. And we wanted to accommodate that, you know, as far as it seems reasonable. Whether we've succeeded in doing that, I'm going to, you know, I will obviously leave it to you to judge, and you can put forward your views on the legislation. And it is, as I say, out for consultation, so you know it can conceivably change between now and when it's final. Okay, so to go into a little bit more detail then on the overseas stuff. So what we've said is that, that there's an exception where there are conditions necessary for the R&D which are not present in the United Kingdom. They are present somewhere else, and it would be wholly unreasonable to replicate them. So, you know, it's easy to think of big examples of that. That, you know, if you're spending your time investigating volcanoes, you may have to, you know, go and go to where volcanoes are. If you need to use a particular facility or piece of equipment which is not available in the UK, then that might be a reason. And we've described, but we've tried to capture that in terms of geographical, environmental, or social conditions as particular things. So, you know, prevalence of a disease might be an example, which is very, very relevant to some of you. We haven't. The way we set the legislation out doesn't try to exhaustively list that. So we're not saying no other conditions can trigger this, but we're illustrating some that it particularly does include, and that a couple of things are explicitly excluded, which is cost or staff availability. And part of the reason for that, I mean, ultimately, in a sense, everything comes down to cost, so that would be too wide an exception. And for staff availability, the government has sort of, you know, has measures to promote UK skills, and you know, people ought to be using those and kind of skilling up UK. So, you know, we await views on how this works, and you know, we will welcome your views, and we might take some questions later on that. So for data and cloud costs, you're familiar with the R&D legislation. We have separate definitions of different classes of cost, and we have added data and cloud costs to effectively to the section which defines software and consumable items. And the wording is data licenses and cloud computing services. See it right there on the screen. I mean, effectively, it's digital data. Cloud computing is defined to include a number of particular features which a company might be paying for as part of its service. We had some conversations with people who provide those services, as well as companies that use them, to try to get that right. In a sense, it's a very factual point. I mean, we want to make sure those definitions work. So again, would be very interested in your thoughts on that. Look forward to hearing those. A couple of caveats to the data and cloud. In the next slide, please. What we have said is we have provided that costs don't qualify where there's a right to sell on the service. And this is kind of consonant with the idea that it's being consumed, and that which is a cost. You're not recovering part of the cost. And we have also said that if the costs are attributable to qualifying indirect activity, they don't count. So qualifying indirect activities are these things like security staff, HR staff, other people who work to support the R&D, whose activities are considered R&D according to the BIA's definition, but who are not actively hands-on doing R&D themselves. So we don't want, you know, the part of the cloud computing that's supporting the HR function to qualify, even where that's if that's happening, even insofar as it's a QIA. So that is data and cloud. That will, as I say, come in. I should also mention it's not on the slide and it's not in the draft legislation, but the package which was announced has said that we will also be extending relief to tweaking the definition of relief so that it's clear that it includes pure mathematics. So moving on to some of the measures that are intended to tackle abuse. I'll go through these quite quickly. The first of these is that we're going to introduce a requirement which will apply to start with for periods beginning on or after 1st of April next year, which states that claims will have to be pre-notified. So there will be a digital system which companies will need to complete to say we are going to claim R&D for this year, for this period. That will only apply if the company hasn't claimed in the last 3 periods. So a company claiming for the first time will need to do that, but then if it continues to claim it, it won't need to do that again in future. Secondly, and going on to the next slide, we will be setting out that we'll not be doing this in legislation. We'll be doing this in primary legislation. We'll be doing this in secondary legislation. So you won't see details of what's got to be in the pre-notification in the package. That will come later under regulations, which will be made once we have the power to make them. Next slide. We're also going to be asking for more information when a claim is made. Again, this is on a digital service. It's not actually done in the tax return. It's a separate service. So there will be a need to engage with that service and provide some high-level details really about the claim. The principal thing there is the breakdown of costs, which currently we don't have to get. Well, we're not wanting that to work on a project-by-project basis with a separate entry on each project. It's aggregated, but with some indication of what the projects are. Right. So I think we are ready for the next slide. Yeah. And again, that will be done using powers that will be included in the finance bill. So the power will say that HMRC may set out the sort of information it needs to be given and the form of doing it, and the way it's done will be via this digital thing. Okay, so that is a brief overview of the draft legislation. As I say, that will be in finance bill later in the year. Next slide, please. The closing date for comments on that is 14th of September. So there's a nice summer exercise to do there. We'd be very interested to know what you think. And in the pre-chat before we started, Martin very kindly agreed to be the recipient of any of your comments and to aggregate them and then put them to us. So I will pass that offer on from him. We're obviously open at HMRC to receiving comments. My email address is in the explanatory note, which has been published for the draft legislation, and you can see the link there at the end for the PDF document that contains the legislation, and you can also find the explanatory note there as well. So I will stop there. I'm quite happy to take some questions later on when we get to those, and I look forward to hearing those. Thank you.
Thank you very much, David. That was great. I think now we'll turn over to Mel Strange and Richard Turner to talk through some more examples. I can see in the Q&A people start to think, in terms of overseas expenditure. What are these conditions? What do I need to do? In what scenarios can I include overseas expenditure or not? So, Mel, over to you.
Super. Thank you, Colin, and thank you, David, for that run through. Obviously, it's great news on the inclusion of data and cloud costs in R&D claims, particularly as more and more of these costs are being incurred as part of the R&D of our members, and generally where kind of R&D within this space is going. In terms of the restrictions on overseas expenditure, the bar looks to be set high, and HMRC have been explicit about what conditions do not qualify for overseas expenditure, namely for reasons of cost or staff availability. And from a practical perspective, there are 2 themes which come to my mind. Firstly, the forward thinking about what work we are undertaking and where, and therefore what information do we need to document and collect as evidence. And secondly, the great critical challenge we need to have as organisations. on why we decide to use a specific vendor over another for the R&D. So thinking about some of the things we need to be thinking about as companies, how much right now of your R&D is actually undertaken overseas? And even if it's not much now, how can that change as you develop through the stages of development, particularly when we start to think about addressing global patient populations? As a result, what could the potential impact be on the available credits to you, and how significant is this? I find it really helpful to be specific and talk numbers to the development teams, where you may need to change kind of decision-making behaviours or choice behaviours when it comes to choosing vendors, to reinforce what the potential loss could be. I also find it's really helpful to flag to them that the R&D tax credits actually help fund their future work. What's really important is, does the company and do you and the rest of the team have a really good understanding of where your R&D is currently being undertaken? And also be part of that decision-making process. The thinking about where work is undertaken should be really built into that vendor selection process right from the off. And even if you've engaged with the vendor, how specific do you need to be in that contract as to where they undertake that work? Do you need to start thinking through being specific about where they undertake that work, and also if they subcontract that work, that work should also be taken in the UK? Obviously, a lot of us will be operating under quality management systems working in this space with the requirement to use approved suppliers. However, using a preferred supplier outside the UK would not meet the conditions unless they can be shown to have unique capabilities and assets that were not present in the UK. So this is a very wide-reaching impact across the organisation as we look at the vendors we use. Obviously, previously, it could have been really helpful to have a vendor who fulfilled many other different tasks you need them to do, almost a one-stop shop. You might now need to think a little bit differently. Is there a proportion of the work that can be done in the UK, and you can contract that piece separately with a different vendor to try and keep as much in the UK as possible where the exemptions aren't met? For those smaller companies, perhaps with outsourced finance teams or in the early stages, it's really important that we start to spread the word and support those companies through the BIA to make sure there's no nasty shocks at the end of the year when they find out the costs they've been incurring can't be included on the annual claim. And I think very mindful about the membership of the BIA and the role we have as part of that. Thinking more broadly than just the tax side of things, how do we tackle this within the accounts? Obviously we'll need to account for the R&D tax credit, most likely a long time off before the tax return is submitted. And what level of evidence will the auditors want to see to get that comfort? And I think there'll be an interesting piece around that decision-making process and, having those conversations with the auditors. It may be something you want to start talking to them about earlier on. And lastly, in terms of my section before handing over to Richard, companies will need to compile evidence to support why it is not wholly unreasonable to replicate that overseas R&D in the UK. So perhaps there'll be some work we can do as a BIA to start thinking around what that looks like, but that will be very much dependent on each different company and how you gather and who is responsible for doing that. So there were just some thoughts I wanted to share on the practical aspects of these changes in the legislation, and I look forward to kind of working with David and the rest of the BIA as we kind of adopt these new rules. And I'll hand over to Richard.
Thank you very much, Mel. So building on that, I'm going to move into almost a pseudo Q&A to run some scenarios with hopefully input from David in terms of his view on how the legislation should work in those scenarios. As Mel said, the bar looks to be set reasonably high. So I'm going to look predominantly at clinical development, because I think that's where a lot of the trickier questions will arise. So what we know from previous discussions is that a multi-site trial should be eligible, provided that the claimant had run what is reasonably feasible in the UK within an appropriate time frame. And clearly the claimant would need to evidence that in some way. However, if a trial could be, say, adequately run in the US and Germany, but no attempt was taken to run any part of it in the UK, I'm just using countries for illustration there, that would be ineligible, even if that would be at an incremental cost to the claimant. So I think that's probably a good baseline in terms of understanding how the rules will probably play out for clinical development. So just building on that, some other scenarios. So from a life science perspective, David, in many cases, the principal reasons for clinical trials to be undertaken outside the UK is the absence of sufficient patients with the requisite disease type in the UK. Would you regard the absence of those patients to be an environmental or a social condition? And it would seem to sit at the periphery of both. And yeah, I'd be interested to know, because I think what would be helpful is if, you know, I think that's going to be a primary reason, and it would be helpful if that sat within one of the stated conditions.
Yeah, I think that's quite right. So I mean, the presence of patients is clearly essential if you're carrying out a trial, and where those patients are is very much a matter of fact. And so, you know, the absence of sufficient patients in the UK would certainly be, I think, a factor which would you know, just justify the work being done elsewhere. I think that formulation in the legislation is not meant to be exclusive. It's not saying these are the only factors that apply. And what it's trying to do is to sort of indicate that what we're talking about is kind of objective factors, if you like, is features of the world, features of the situation we're in, rather than preferences or subjective choices. So yeah, I mean, I think whatever we're going to do, I think we need to make clear that that's one of the prime cases that you might come across. Whether we might do that in guidance or whether we were to include something in legislation. I mean, I think it's a question, but I'm certainly, you know, quite clear that patient availability in general is an issue which is relevant there. You know, all these things become shifty if you push them too far, you know. But I think that's a prime example, really. I would actually like to go back on the scenarios earlier. I just sort of want to make it clear that even in the second case, if you hadn't attempted to do it in the UK, it may still be okay to do it abroad. The point is, can you justify it? So, you know, obviously having tried in the UK and not being able to is one way of justifying that. It simply wasn't possible. But you know, if you can point to, if you can explain how the exception applies and show that it applies, then that's adequate.
Okay, thank you. That's really helpful to understand. Yeah. So developing that, and again, this sort of multi-site trial. That work is typically outsourced to a CRO, contract research organisation. Yeah. When you get to later trials, there's often a significant amount of what you might call personnel cost, which can be project management, which could be data analysis undertaken by the CRO.
Yes.
And so, and those CROs often tend to be large multinationals themselves.
Yeah. So
there's a good chance at the moment that some of that activity, a lot of activity, may not be undertaken in the UK, which is somehow out of the control of the claimant. And so, in terms of evidence, firstly in terms of evidence, but also in terms of support for whether this would be qualifying R&D, I'm just wondering at what level that sits at. So is that at the claimant level to say, well, we had to use a multinational organisation because a domestic CRO couldn't have delivered this, and is that enough for the entirety of the project, or is there an obligation on the subcontract, the CRO, to look at how it undertook those activities, to say, okay, well, you know, some of it we undertook in the UK, so you can claim that, but some of it, you know, we've got a team in, you know, the US, and they're always going to do that work, so you know, that's outside the scope. Yeah.
Yes, I mean the level, I mean, the evidence question is a difficult one to answer, because it's always going to vary a bit depending on the particular circumstances of particular contracts and of the nature of the R&D. So, you know, I'm a bit wary of being categorical about what constitutes useful evidence, because that's you know, tying the hands of my operational colleagues in trying to establish facts in future. But I think that it's a really interesting question when you talk about things like you know, about project management and data analysis, because obviously the way we've constructed this definition, we're looking at, if you like, the hard activities which constitute the R&D, which are, I think, the things which are going to take you to one place or another. But it doesn't necessarily follow that those other activities follow where what's the right word for it? I'm not sure what the word. The physical work is being done on the R&D. I mean, the data analysis can presumably be done in lots of places, and probably is done in lots of places. So I think that you have to. I think you may have to decouple that a little bit and accept that some of it may qualify and some of it may not. So an argument that the work has to be done in a particular country because there are patients there and that we need to work with the patients is quite open and shut, I think, in a way. The argument then about the activities that flow up to that is less clear cut. You may still be able to make out a case, though, that it needs to be close to the activity. Or that I could see that as being clear in some cases, but not necessarily always. So yeah, I think this is going to require probably a little bit of communication and negotiation between the parties to the contract, in order to ensure that the amount of relief which is due can be claimed. I don't think there's any way around that. And obviously, in some cases, there'll be connected entities, and that won't be an issue. But yes, I mean, I wouldn't want to diminish that factor. And it's it's something obviously we're open to views on.
Thank you. Moving on, one of the stated conditions recognising they're not exhaustive was regulatory, and that's often been pinned to clinical trials in a lot of the commentary building up to this. And as you rightly acknowledged, for regulatory reasons, you often have to run trials outside the UK.
Yeah.
I think there will be scenarios where the chances of a drug being approved would be significantly increased.
Yeah.
If that trial was run in the territory. So regulatory motivation rather than necessarily a regulatory obligation.
Yes.
And the conditions seem to imply it should be an obligation, because again, we know they're not exhaustive. So I'd be interested there in, where it's not an obligation, but a motivation.
Yeah. So that is a really, really interesting example. And I mean, it's an example of how, the real world isn't always as clear cut as you might like when you're writing legislation. I think in my mind, in setting out the legislation, we were very much thinking of obligations, because obviously once you go beyond obligations, you're into a world of preferences and choice and so on, which is a lot harder to capture in legal language, but also actually a lot harder to deliver. But I do take the point that I think it could be a grey area. It's clearly important to the process that you get clearance, and there may, if there's a strong influence on that in terms of where the work takes place, then that's obviously a factor the company is going to be looking at. So I mean, I'm going to weasel out of this one a bit and say that I think we need to consider this. I think it's one of the, and it's really useful, and I think it would be helpful to have a little bit more background about that kind of case and about the sorts of real circumstances that go behind it and the difference it might make. So yeah, very, very, very interesting point, that one.
Okay, well, so hopefully we can develop in some of the correspondence via Martin as we go forward.
Yes.
Rather than dwell more on it at this point. I think you, in part, probably have answered the next scenario, but I'll raise it anyway, and you can say the same answer possibly. But again, thinking now of sort of key opinion leaders who can be very influential when you come to commercialize a new medicine. And so it may be that you want to run trials close to those key opinion leaders. And let's say, for sake of argument, the leading thinking for this drug is all in the US, just for simplicity.
Yes.
And so sometimes you could say that to run the trial effectively, we need to run it at those sites where those, in proximity, those KOLs. And so therefore the execution risk is significantly mitigated by doing that. But equally, there could also be, you could be putting yourself at a significant commercial disadvantage if you're not doing that. So there's an element here of sort of, let's say, execution risk, but there's an element of commercial thinking as well. And I'd be interested in your thoughts around those.
Yeah, again, it would be good to know a little bit more about these sorts of sort of situations. I mean, I think my feeling is that if the motivation was, if you like, a scientific one, that those are the people you need to work with for objective reasons like that, it's an easier case to make. I think if it's about having them on board in order to make the project more attractive, I think that probably falls, if you look, you mentioned the high hurdle earlier, that's just maybe a little bit outside the bounds of the hurdle, but please do put more detail to us on this. I think it would be good to know more about.
Okay, thank you. I'm sure we will. And just the last one, really, just to, and this is more in generality here now. But this is, if you're looking, and perhaps this is more relevant to preclinical R&D, where you're simply going to somewhere for expertise. And we're looking for this two sides, because obviously we need, and you want the legislation to work, like there's every interest in the legislation to work effectively. So you may have a preferred supplier because they have superior perceived capability, albeit you could point to similar suppliers in the UK. Again, if you can demonstrate an evidence that, objectively that superior capability, would that be enough? Equally, does there have to be a complete absence of that capability in the UK, or is there somewhere in between? I think this is where guidance would be particularly helpful.
Yes, yeah. No, I completely agree, and we will obviously be providing guidance alongside the final legislation. I mean, we're obviously at a stage now where it's useful in these conversations to begin to collect an idea of what areas need developing in terms of guidance. But it's equally important at this stage to have views on hard situations which the rules may not quite get right or aren't quite adapted to. I mean, I think the answer in that one is that we've again, as I say, we drafted a high hurdle, so we've sort of talked about really can the work be done in the UK, I think, and the legislation explicitly excludes cost as a factor there. So I mean that's cost is the other side of the coin of about a preferred supplier who can deliver high quality, isn't it, in a sense, really? I mean, if you could spend as much as you like, then you can probably get it. So I think that again is a borderline case, and you'd have to look at why it needs to be done abroad, what it is you're getting that you couldn't get in the UK. I mean, it may be that it may be, for instance, that you need a quicker service, and that the only way you can get that is to go abroad, for instance. So I kind of recast it in those sorts of terms, I think. Okay,
but that might be permissible if you could say, okay, there was no capacity in the foreseeable future, so we had to get that supply overseas.
Yes.
That's helpful. Thank you. David, thank you very much for addressing this. Hopefully that has helped illustrate and bring out some of the themes that I know are going to be concerned to a lot of the participants on this call. But at this point, I'll hand over back to Colin.
Thanks very much. I've seen various questions coming in on the Q&A. Do keep your questions coming in. I think I'll just try and pick up a few of them just for a bit of clarification. I think when we're talking about the inclusion of data and cloud computing in R&D claims, all of this stuff about is it done in the UK or is it done overseas is irrelevant. That's not a test, not a new requirement. So it's all upside on that. In a way you couldn't historically include data and cloud computing costs. You'll be able to going forwards. Doesn't matter where that's being done in the world. That's absolutely fine. And that's in general on any R&D consumable. There's no issue in terms of whether it's UK or overseas. So the issue here on the overseas stuff that Richard and David have just been talking through is on subcontractors and on what we call EPWs, externally provided workers or agency workers. Is that work being done in the UK? Yes, it's fine. Is it being done overseas? Well, then it needs to meet some particular conditions and tests. And all of this, it's kind of messy because you're having to consider where is the work being done. Doesn't matter legally who you sign up with. You sign up with Charles River in the US or you sign up with Charles River in the UK, makes no odds whatsoever. What matters is where are Charles River going to do that work in terms of when you think about what can I put in my R&D tax credit claim. So there will need to be interaction with vendors to work out where they'll do the work in order to work out what goes in your tax return. So if you think about what we go through as tax advisors, and we're putting people's tax returns together, we go, right, give us your list of your R&D subcontractors, we run through the subcontractors and we go, right, which of those are really doing R&D? Yes, they can go in. Going forwards, what the new rules means, we go, are they doing R&D? Yes. Are they doing that work in the UK? Yes, they can go in. Are they doing that work not in the UK? Okay, we need to look in more detail. You then say, right, for these people doing the work outside the UK, basically we're saying, firstly, can we get it straight into the law in terms of there are reasons for doing that work outside the UK, be they, I keep having to write them down at the moment because it's new law, but geographic, environmental, social, legal or regulatory. If the FDA said, you must do this trial in the US, well, then you have to do the trial in the US. Absolutely fine. You're straight into the law, and I don't think anyone's going to have an issue with that. The more subjective stuff is where you say, okay, I've got a preference for using someone outside the UK. Well, just having a preference because I've worked with them before or I'm related to the chief exec, not good enough. If you can say, to my mind, if you can say that subcontractor is doing that work outside the UK, they have a unique selling point that no one in the UK has, or there's something about how fast they can do it compared to someone in the UK. And if I use that person in the UK, it would derail my business plan because they're either not available or not available for the next 3 years. Then I think you can get there. If you can show it would have a, it would be to that point in the law, it will be unreasonable for you to try and replicate that in the UK because the capacity, the capability does not exist in the UK. So to a large extent, it's quite a tough one, this, because you're being asked to prove a negative. We chose that vendor outside the UK. Okay, now prove why you couldn't use someone in the UK to do that work. And certainly in discussions with with a few clients recently, they're saying, well, we've got quite long lead times on this stuff. We're looking at appointing CROs now, and we're going to be running a clinical trial with them for over some period of time that will be relevant when the new law comes in. And therefore we'll need to start building that evidence as to why we chose them, and it's why we picked them from a procurement point of view rather than someone in the UK, either because the alternative in the UK either wasn't there or wasn't there with the expertise we really needed. But all of that is information that you'll have to have ready when you put your claim in. You can't just chuck people into your R&D claim, chuck subcontractors in and hope the revenue won't ask the question. The other aspects of the law that are changing are setting the bar very high. You need to have thought some of this through before you put people in the claim in the first place. David, would you have I said anything there that you wouldn't agree with?
No, agree all the way with that.
Good. Okay, I think Sam, I think we need to try and deal with some of the sort of questions that are coming in. I think let's see. I think I've dealt with the stuff on data and cloud. It doesn't matter whether it's UK or overseas. Another one here, nice one. If an existing overseas subcontract arrangement is in place, and it will be theoretically possible, but impractical and not cost efficient to replace this with UK contractors, then it's possible to continue to claim. I think that is straight into what the law is trying to tackle. If purely on cost ground, you say, well, it's just going to cost too much to shift to someone else, that's not good enough. I think if you can say, but actually, I could move it to someone in the UK, but they will not give us what we need. They don't have the expertise. They, in simple terms, they can't perform the experiments we need them to, and it's going to derail our business plan. Then I think you've got a much better argument there. But I think on all of this, it's a matter of judgment and evidence. And you've got to bear in mind on all of this, the UK tax law is full of these kind of situations where either you build your evidence, you discuss it with the revenue, or you do what we love to call a just and reasonable apportionment of this overall cost. This much is home and dry, definitely is in the law and can be included, and this bit is a subjective bit. Richard,
Colin,
do you want to comment on that?
Colin, just to add to that point, just for clarity, they're for pre-existing arrangements. There's no transitional provisions. It would just be.
Oh, absolutely. Yeah. The new law comes in, and that's it. And you can't say, oh yeah, this was up and running before the law changed. Yeah. Interesting one there. So sorry, that one just disappeared. Let me keep going through. Again, questions about material costs and R&D claims. Material costs are what we call R&D consumables. Those are still fine. Doesn't matter whether you're buying your consumables from Taiwan or buying them from Dagenham. It doesn't matter. They can go in either way. And then some other stuff on, yeah, if we have an ex-UK CRO, can we include their cost? You absolutely go through all these tests to work out can I include them or not. So there is more work to be done now, and I think as I say, to my mind, you go through in the way you used to, but with more columns. You say if they're in the UK, they're in. If they're overseas, are they within the exemption or not? So David, just on that, so we've got the law, and it's probably going to be adopted largely in the form we've already seen. When can we expect more sort of guidance from the revenue, either in the revenue manuals or another guidance as to what we deal with these more sort of grey areas in the middle?
Yeah. So I would anticipate that we'll be drafting guidance over the next few months for this, and I think that I would say what I would like to happen is that should be available when the legislation is being debated in Parliament. The reason I was saying I would like that to happen is that I don't know what is going to happen come the autumn and what other pressures there might be in terms of politics and policy development. So it's close to the top of the list of my priorities that we should do that.
Okay, that's helpful. Thank you. Okay, I appreciate it's not all within your gift. Good question here from Richard Waterfield. If the work is subcontracted, preclinical and clinical, to an overseas university from which the UK company is a spin out, and that enables the company to be world leading in a key therapeutic area, what happens then? Well, I mean, whether it enables a company to be world leading in a key therapeutic area is not a test in the law. It's not, it's not saying, well, the revenue shouldn't stop me doing this because I want to be a world beater. That's not what this is about. It's a very particular piece of legislation in what's called Section 1138A. So the question would be, you've got a UK company claiming R&D tax credits, and it's going to subcontract preclinical and clinical work to an overseas university. Well, that overseas university is a subcontractor. Where does it sit within the new tests? Has it got capability that you couldn't replicate in the UK? If it's the expert in your particular niche area of biochemistry and there's no one in the UK who can do that, well, I think you're home and dry. But I think, if you say, well, they're doing it because we kind of obliged to use them because they understand the background and we were spun out from them in the first place, and it's just sort of a matter of history and convenience, that's not good enough. That's where I get to.
Yes. Yeah.
Go on, Richard, I think you want to come in on that.
Yeah, well, actually, Colin, I was going to raise, I'm just scanning through the questions where I think one that draws out an important point to the extent it wasn't previously clear. So the question is, we contract with a UK entity of an international CRO for a multi-country clinical trial. They resource globally, and the project team can change location over the course of the contract. Are we supposed to ask the subcontractor what costs have been incurred, where, or is contracting with the UK entity sufficient? To which the answer is no, you do have to, it's the former, you do have to ask and understand where those activities are undertaken. So who you're contracting with isn't sufficient.
Yeah, I disagree with you on that one. I think the first thing you do is say, we're contracting with this organization. What is it we're getting from them? Are we getting something from them we can't get in the UK? Because if you are, and you meet that test, you're getting something from them you can't get in the UK, the expertise doesn't exist in the UK, then to my mind, you can put the whole cost in. But if you don't meet that test, then absolutely, you've then got to go to them and say, can you unpick for us where you're going to be doing this work? How much is done in the UK? How much is done overseas? That's the way I'd tackle that one.
But the key point is simply who you're contracting with isn't sufficient. You need to know. Absolutely.
Yeah, this is not a matter of legal convenience. It's not if every CRO can just set up a UK subsidiary that you contract with and they do the work where they like. That the test and it is asking vendors, where are you going to be doing this work? Which they might be slightly surprised by initially. But I'm sure they'll get their heads around it pretty quickly, because obviously it makes a huge impact on their pricing if they know you're getting an R&D tax credit on the money you're spending with them. So I'm sure they'll be looking at this with interest. We may have some on the call today, I don't know. Right, so I think we're being directed to another question there. Sam, which questions are we missing here that we haven't picked up on, to where there's quite a lot in here?
Sorry, there's just one in the chat box, Colin. If the reason for using an ex-UK CRO is cost, we have an emerging picture. What about different levels of risk?
Not quite sure what that. Go on, David. You can answer that one. I'm not quite sure what the question means.
Well, I think the first thing to say is I think that's a really good question. So if it's levels of risk, then what you're talking about, whether or not the project is going to be successfully delivered, aren't you? Ultimately, that's the ultimate risk, or delivered to time or to budget or whatever. So I don't think you can completely get away from cost, because I think cost and risk are very closely associated there. But I think you might be able to make out a case that in order to mitigate a particular risk, you need to be, you need to be going to somewhere where the facilities are such that they can do that. And if you can make out a case that that can't be done in the UK, then I think that might well, get you in. But it is difficult to answer in a hypothetical sense. Probably another scenario I think I'd welcome some details of. It would be useful to be able to consider and think about that sort of situation.
But David, is it fair to say that you would expect some objective factors in supporting that risk assessment?
Yes, that's right. Always, I think what we're trying to get to with this is some objectivity and some kind of clear justification.
Yeah. I think the other thing we're going to see more of going forwards is sort of mixed contracts. So you sign up with someone and they're producing both clinical trial material, so R&D consumable, and providing services. And I think you'll see more of people saying, well, of the overall amount we spend with that vendor, this element is R&D consumable and is not subject to the debate, is it UK, is it overseas? And that all goes into consumable. And the remainder is services, it is a subcontractor arrangement and is then subject to the restriction. But I think all of that, the only way you can unpick things like that is it will involve a very close reading of the legal agreement between you as the claimant company and that vendor. What exactly you're legally signing up to do? What is it you're buying? And if it all gets mixed in, we as the CRO will provide the following list of things. There's a great long list, and then just one price. I think you're in an awkward territory. And if you can sort of tie it through and say, okay, hang on, of the overall cost, this amount we know is explicitly for production of the clinical trial material, and this much is for running the trial, then I think you're on much safer ground. Is that how you would see it, David?
Yeah, I think so, yeah.
Okay. Go on, Mel, carry on.
Yeah, no, I was just going to say, because that links into one of the points I was raising, is really in kind of putting yourself at the start of the process, not at the end in terms of where the R&D is done, help that decision making so you can make sure we've got the right agreements in place, have made those right decisions. Because I think as one of the questions said, and we talked about, development is a really long thing, and it's going to be really hard to unpick it afterwards or make decisions to move. And having the voice at the start and changing people's behaviours and understanding is really going to be critical to make sure we maximise what we can get from our R&D tax credits.
Yeah, excellent. Good question here from Christopher Evans, is in the Confluence tax team as it happens. Currently, subcontractor costs claimed under RDEC are limited to a list of qualifying bodies, as in, if you're doing an RDEC claim and you're using a non-UK university, it has to be on a qualifying list. You can't just put them in. And the question from Chris, will this list be updated or will it become defunct as a result of these changes? I don't know, David, what the plan is there, whether we'll have both the list and the 1138A requirement at the same time.
Yeah. I mean, the list of qualifying bodies is a sort of administrative convenience in a sense, in that they are identified by having been designated as such. It having been found to be intractable to actually have an objective test which would let you see whether a overseas body was a qualifying body or not. So as long as overseas subcontracting continues to be available, and it will be, providing it's within the within the new rules, I think it will need to have this list of qualifying bodies. It was actually updated fairly recently. I think it's just I'm not sure whether that's entered into force yet or whether it's about to enter into force, but with a new crop of bodies, and with one actually removed for almost the first time. So yeah, that will continue to happen.
Excellent, thank you. Another good question here, and I've heard it raised by a number of people. Does the BIA have any information on current UK-based CRO capacity compared to what would be demand if it was all undertaken in the UK. So just a general point, that there is limited capacity in the UK. We all wish there was more capacity in the UK, but to what extent will you be able to say, I needed to do this work overseas because the capacity just didn't exist in the UK, or my sense is it didn't exist? How high is the bar set, from an HMRC inspector point of view, to prove that that it just wasn't feasible to run this in the UK in sufficient time?
Yeah. So the language of the draft legislation is wholly unreasonable. So there is some space in there for the circumstance where in principle it could be done in the UK, but it would simply be not, it's beyond beyond reasonable to expect it. So I mean, reasonableness is obviously a tax concept. I think that existence of capacity is a useful bolstering argument there. I mean, it's not going to be within the company's gift to create that capacity in general, I don't think. So looking at objectively what the market can provide is always going to be useful. So yeah, I mean, I think that's a useful piece of evidence and a useful kind of data point, I think, in establishing what's reasonable and what isn't, probably.
Okay. Yeah, it doesn't get you all the way there, but it's helpful.
Yeah.
Okay. Good question at the bottom there. What happens if you pay for materials delivered by an overseas company, charges a 10% service charge on top of materials? Will the materials be allowable? Now, the materials we would very much see as being R&D consumables. Yeah. Therefore, we don't mind if they're coming from overseas or from the UK. They can all go in the R&D tax credit claim. I think there's an ongoing wrangle we've got where if service charges in terms of sort of delivery charges and stuff are explicitly itemized, then we often have to strip those out because you say that's just a service of delivering. Whereas if a provider of clinical trial material just does one overall price, when the delivery costs are sort of wrapped up in there, then the whole lot tends to go into the R&D claim. I don't know, David, if you've got any thoughts on that. It's quite an awkward one because it often depends how people are invoiced and how they account for things in their accounting system.
So I'm going to be tactful and not comment on the substantive the question about including costs or not, but I mean the draft legislation doesn't make any difference, doesn't apply any new rules to overseas sourced materials, and I don't think that would make sense because the point of the issue with overseas costs is not so much where do the inputs come from, it's where does the work take place, I suppose. So if you're getting your materials from overseas, that's fine, you're getting them from overseas, you're then using them in the UK. But as I say, there isn't a restriction being imposed on that. So I don't think anything, I suppose what I'm saying is I don't think anything in this draft package would make a difference to that situation.
Understood. Yeah. Good question here from Jay Cockcroft. What if it would be a breach of contract to switch the existing overseas CRO agreement to a UK provider, i.e. you're tied into a minimum contract period? So, basically, I guess, there are going to be costs and problems and legal problems if you switch. Yeah. I guess, the answer, it's probably a matter of degree. To my mind, if it will be, ruinous for you to move that agreement, then I think you've probably got the beginnings of an argument, but of itself, I don't think that's going to get you there. You've chosen to use someone outside the UK. Well, under 1138A, you've chosen to use someone outside the UK rather than in the UK. You can't include the cost. I don't know what your view is, David.
Yeah, I mean, I suppose my point would be that what we're talking about here is the additional relief provided by the R&D tax relief, and so there's nothing to stop you from continuing to do the work overseas in those circumstances, but you might not get tax relief for it, which I accept is a disadvantage. Addressing something like that tidily would possibly need some sort of, if a contract was in place before X date kind of provision, which are always a little bit difficult. I suspect that you wouldn't get there on that, because in principle you could move to the UK. But I think that's something we'll have a think about that. we'll have a think about that one, because I think it's, you know, it's obviously a hard case, and
yeah, I think so. Martin, if we can pick that one up when we're sort of gathering up bundles of questions and getting them into David, that would be useful. And a question coming in there from Harj Bansal about having patients from ex-UK countries is beneficial when a drug comes to being reimbursed. For example, Germany looks favourable on companies with clinical data, which includes patients from their population. I think we explicitly covered this one earlier.
Yeah.
You know, if it's just sort of more favourable and likely to get an easier ride if we've used a German population when we're looking for German approval, well, that's not good enough. If there's a requirement from the regulator that says if you want approval in Germany, you've got to do the clinical trial in Germany, then you're home free. I think you're into the more subjective one. What is it you get from a technical point of view in terms of a unique selling point from, you know, doing the work in Germany rather than doing it in the UK?
Yeah, there's a helpful example, I think, of the point that you brought up before. So yeah, it's something we'll certainly look at. Yeah.
Just aware we're sort of over time now. Are there any other Sam, any other questions you're aware of that are sort of similar themes we haven't really picked up on in previous answers?
Time does pass when you're having fun, doesn't it?
It really does. Just one there from Shabir Hussain on the effective date, just to clarify, for companies with a 31st December year end, will 2023 qualifying expenditure be prorated or simply not apply to 1st of January 2024? It will not apply to 1st of January 2024, where, as ever in tax, we're looking at the accounting period of a company. This first applies for accounting periods beginning on or after 1st of April 2023. So if you've got a December year end, the first period you've got with the accounting period beginning on or after the 1st of April 2023 is the period beginning 1st of January 2024. So it's not until then. So I think we're, as I say, over time. I think probably, unless anyone's got any wild objection, we'll probably call it a day there. I think if you can keep feeding the questions through, Sam, I don't know which the best way is to do that, but certainly, you know, Martin Turner from the BIA is happy to collate questions, and we can then feed them, sort of gather them up, feed them into David, and we can try and get some answers, and most importantly, inform the legislation or inform the guidance going forwards, because it's been a very successful dialogue so far, and we're very keen to keep it going.
And thank you for all your help and input into this, and for organising the seminar today. I think it's been fascinating. Thanks.
No, thank you. And I think in overview, I think where we're getting to is this is going to increase the compliance burden. It is going to result in a trim to some R&D tax credit claims, but you know, this is not, you know, some disaster scenario. There's more work to be done. You don't get something for nothing in this life. You're going to have to do some more work to get your claims to work. But you know, it's I think in general, if you work hard enough, most of your costs will still go into your R&D tax credit claims. That's certainly the way I'm seeing it currently. So. Excellent. Well, it just remains me to say thank you very much to our panelists, David, Mel, Richard, Sam, thanks for organising it. Martin, thank you for agreeing to take on all the questions going forwards. You've got the worst job in the world, I think. So without further ado, thank you very much for attending, and good to have you on the line, even if you can't say goodbye in person. Thank you.
Thank you. Thanks. Bye.